So good morning. I hope everyone is well this morning. I take this chance to invite you all and to welcome you all for this session as we start this webinar today for the taxation of NGOs. So I hope I'm audible enough and also you can see my screen. In case of any issue, kindly type in the chat box and we are going to respond to that. In case of even a question as we go on, we're going to be responding to that in the chat box. But also at the end of the session, we're going to be having a brief session for answering the questions that will not be handled in the chat box. So we can begin by a word of prayer. So Father, we come before you this morning with thanksgiving in our heart. We thank you for this chance that you have given unto us. As we start this webinar, we pray that you may be together with us, guide us and protect us, give us a mind of understanding and cooperation. In Jesus' name, I pray and believe. Amen. So you can confirm in the chat box whether you can hear me and also if you can see my screen that I've shared. Can we confirm so that we can begin together? So thank you, Evans, Matthew, and John. So I believe we are together. So I can request that I switch off my camera so that we can have a smooth connection. So in case of any issue, kindly type in the chat box and we're going to respond to that. So I'll start by introducing myself. My name is Merinditi. I'm part of RWK team. And today I'll be taking you through the taxation of NGOs on behalf of Madam Regina. So we'll start by introducing. So I believe we all know what an NGO is. And for those who are new, so basically an NGO, it's an entity which is established basically for charitable activities. The aim is not to make profit or for any personal gain. So NGO is a non-profit entity operating outside the government control, and it focuses on social, humanitarian, and developmental issues such as education, healthcare, disaster relief, among many others. So the key major point to note on the NGO, the focus is not on profit making or for any personal gain, but it is there for charitable activities. So for NGOs, they must be registered with the NGO Coordination Board, and also they need to obtain a KRA PIN from KRA. So apart from the fact that it is not controlled by the government, we also need to have a KRA PIN to register that entity. So the first step, you need to register that with the NGO Coordination Board. Then you proceed to the KRA to register for a KRA PIN for tax purposes. Because for NGO, they are also subjected to taxes, as we are going to see as we go on with our class. So like any other entity, like the profit-making entities, the private limited, the partnership, even the sole proprietorship, the NGO, they are subjected to specific taxation that governs their operations. So we are going to check on the different tax obligations associated with NGOs in Kenya. So for the tax obligation, we start with the corporate income tax, that is the CIT. So even if we are dealing with the private companies, we are aware of this obligation, the income tax company. This one is a direct tax on the profit earned by any legal entity that is operating in Kenya. So at the end of the year, the profit that you have earned as a entity, it is subjected to taxation, which we refer to the corporate income tax. But in this case, for NGO, we have said that its aim is not to make profit. So we are going to see how the taxation will be effected for these entities. So NGOs are exempted from CIT if their income is used solely for charitable purposes. So in the introduction, we have said that for the NGO, they are established for charitable activities. So that income derived from there, it is exempted from corporation income tax. if at all that income is used for the charitable purpose of that organization. But you may find in scenarios where this NGO, they are involved in other activities that are generating income. So such other activities, they are taxed. So to qualify for tax exemption, you must apply for tax exemption certificate from KRA, and it is valid for 5 years. Just the same way like any other normal entity, apply for exemption from KRA. Even for NGO, for you to qualify for that exemption, not just think by word of mouth that we are exempted from the corporation income tax. You need to apply for that exemption from KRA, and this exemption is valid for 5 years. After that, you need to do a renewal, and there are conditions which you need to meet for you to qualify for these exemptions. So we are going to also to check on those conditions for you to qualify for exemption from KRA. So NGOs must demonstrate that their income is directed towards public benefit activities to obtain the exemption. So for you to be exempted, you have to show the authority that this income that you're getting from this entity, it's for the charitable activities going to benefit the public within the region in which you are operating. So there is no any other income that you are deriving which is for profit purposes or even for any personal gain for the people on board. So you have to demonstrate to KRA for you to qualify to obtain this exemption. So we have types of income exempted. So category number 1, we have donation, grants, and membership subscriptions, which are generally exempted from income tax. So we are aware that the NGOs, they operate from donation and grants. So this one is basically exempted from income tax, but not in case they have any other income, that one will be subjected to tax. But the major income that they use to operate the donation and the grant, that one is exempted. We also have membership subscriptions. They're also exempted from income tax. Number 2, we have income generated from activities that directly support the NGO's mission. They also qualify for exemption. If the purpose of these activities is for the public benefit, there is no benefit which is being attached to the people on board of that entity. It's just for the general public within the area that you're operating. So that income will be exempted from income tax. So for the tax exemption, we have said once you go to KRA to apply for the tax exemptions, there are conditions that you have to meet as an entity for KRA to approve this exemption. So we are going to check on those conditions. And condition number 1, the organization, this NGO, should be established in Kenya, or its regional headquarters are situated in Kenya. So that's number 1 condition that you have to fulfill. Then the NGO is in Kenya, or the regional headquarters are situated in the country. So that's number 1. So before you go to apply for this exemption, make sure that you fulfill that condition. Condition number 2, the income must be expended either within Kenya or for the benefit of Kenyan residents. So this income that you are deriving, or even that donation that you are receiving from the donors, the grants, it must be used within the country and even to benefit the Kenyan resident. So you have this NGO here, but the donation you are receiving, you're going to support people from other countries. So that one cannot be approved by the revenue authority. So you need to prove that this income is going to be used here in Kenya and to benefit the residents of Kenya. Number 3 condition, the NGO must operate solely for the charitable purposes, such as poverty alleviation, public distress relief, or advancement of religion or education. So you have to show that this NGO that you have registered, this organization that you have registered as an NGO, the purpose of it is among this category. You aim to elevate poverty in a given region in the country. you want to promote education or religion in those disadvantaged areas. So you have to show that so that you can qualify for exemption. Number 4, the business activities generating income must be conducted in the course of executing the NGO charitable purposes or primarily carried out by beneficiaries of these purposes. So you have to demonstrate that any activity that you are doing to generate income, it is for the purpose of this charitable activity that it is meant for this organization. So those are the 4 conditions that you must fulfill for you to qualify for exemption for corporate income tax from KRA. So the next item we are checking on the compliance requirements. So for you to be compliant in regarding to taxation as an NGO, what do you need to do? So you must file annual returns and maintain accurate financial records to demonstrate compliance with tax obligations and ensure continued eligibility for tax exemptions. So despite the fact that you are exempted for income tax, you still have that obligation with you. So you need to file the annual returns at the end of each accounting period. Make sure that you have filed the returns and also you have maintained the financial records. If it's this income that you have received in form of donation, grants, you have documentation to show that this income that you had for this accounting period, for instance, you have received donation or grants worth 50 million. You should be having documentation to show that how was this income, how was it spent within that income, within that accounting period. The expenditure, have a record of the invoices, the receipts, the payment vouchers that you have to support every record that that was incurred in the company, and you have claimed the same in the returns. So that is compliance number 1. Make sure that you file the returns and have maintain the accurate financial records for the organization. So NGOs must be established for charitable purposes. So we have talked about that. For you to be compliant, make sure that this organization is the purpose is for charitable activities. Once you register this, don't engage in any other activities apart from the charitable purpose which was intended for this organization. Otherwise, you will be non-compliant and there are maybe even penalties that will be charged for that, because at the end of the day, you are trying to say that you're operating as a non-governmental organization without even making profit, but you are engaging in other activities. So at the end of it, you are even evading to pay taxes. So make sure that you operate within the purpose that was established for that organization. The organization must be registered under the NGO coordination or the Society Act, and you have a valid registration certificate. So I said as we started, the starting point for you is to register the NGO under the NGO coordination society before you proceed to KRA to get a KRA PIN. Make sure that you are registered and you have that valid registration certificate. You also need to submit application to KRA in a prescribed format, accompanied by necessary documentation. So for you to submit the application, in this case, it's for the exemption. These are the documentation that you need to attach or to submit to KRA. You have to have a duly completed application form. Number 2, you need to have a tax compliance certificate of the organization. This NGO is an independent organization. It should be having a tax compliance certificate. So we talked about the compliance, filing the returns on time, maintaining financial records. So for you to be tax compliant, you need to have filed the returns up to date, no tax liability, so that you can acquire the tax compliance certificate. Then you need to have the tax compliance certificate of the directors, trustees, or the office bearers. Like just any other entity, we have directors in the company. The same case for the NGOs, the directors, the office bearers, all those individuals on board, they need to be tax compliant. So you also need to attach a tax compliance certificate for each of them. Certificate of incorporation or registration, attach a certificate of incorporation for that entity. Then a copy of expired income tax exemption certificate. So in case you want to renew a tax exemption certificate, we said that the exemption certificate is valid for 5 years. So the period for 5 years has elapsed and you need to renew. So you need to attach the copy of the previous certificate which has expired. Have a copy of memoranda and articles of association, constitution, or trust deed, which outlines the objectives and including the proper dissolution clause. So each entity, even the private entities, they have the memorandum of association and the articles of association, even the constitution. So you need to attach this document which will show the objectives of this entity. Also, you need to attach audited accounts for the last 3 years. So in case you are applying in the year 2024, you need to have audited financial accounts for the year 2021, 2022, and 2023, and they need to be stamped by a qualified auditor. So the audited account, they need to be stamped for the last 3 years. Then we have copies of the last 3 annual returns filed with the relevant regulators, that is the societies, NGO, Ministry of Land, among many others. So even for the private companies, we have annual returns that we do under the e-Citizen. Apart from the normal KRA returns that we do, we have annual returns that are done under the Business Registration Services in the e-Citizen for each and every year. So even for this case, for the NGO, the different regulators, there are those returns that are filed on an annual basis to them. So you need to attach them for the period of the last 3 years. Also, you need to have certified bank statements for the last 3 years. Payout analysis based on the bank statement for each year using the format provided in the application form. So during this application, in the application form, there is a format that you are required to portray the payout analysis. So you need to provide the same. The other document that you need is the organogram, or rather the organizational structure, to show the hierarchy in that organization, who is at the top, followed by who up to the last person, and even the department wise. That's what we mean by the organogram. So you need to have that well documented for the provision when requested. Also, you need to have a current letter of introduction from a government official, preferably the county commissioner of the location where the organization operates. So assume you're operating in Thika, this is where your NGO is situated. So you need to have a letter from a government official. You need to submit that. So this letter, you need to visit the county commissioner for you to get that letter. In a way, it shows that the authority within that jurisdiction, they are aware of this organization is operating within their area, and even it's operating legally. We have a list of donors for the 3 previous years, indicating the amount that they have donated to the organization and their country of origin. So make sure that you have documented all this correctly. In each year, the donation that you receive, make sure that you have proper documentation. Who are the donors? How much did they donate? And the country of their origin. List of beneficiaries for the last 3 years. So you receive the donation. The activities that you undertook from this donation. Who are the beneficiaries? Maybe it was to promote education. Have a list of these students that benefited from this program. We have photographic evidence of programs and activities for the last 3 years. So those activities that you carried out for the last 3 years, you need to document them. You need to be having photos to show as evidence that you are undertaking those activities. And even for that program, it is in place. There are those photos in different times or different activities and different venues that you are. Make sure that you document that for the last 3 years. Also, you need to have an impact report of the charitable programs and the activities. Copies of the title deed and logbook where applicable. So you may find that this organization, they have a land. They also have motor vehicles. You need to have attachment of those documents showing the ownership, the title deed, showing who is the owner of this fund, logbook, who is the owner of the motor vehicle in that organization. So in case requested, that's why we have said where applicable, make sure that you have those documents with you. Should be having a sample payroll for the last 3 years if the organization has employees on the payrolls. And I believe even for the NGO, there are employees there. So make sure that you have a payroll for those employees. All the details for the employees, the salaries they are receiving, the deduction, any other benefit attached. Just the normal way we prepare the payroll for any other entity, the same way it should be done for the NGO. So basically, that's all for the corporate income tax that is done at the end of the year regarding the NGO. So the major point we have said that it's generally exempted unless then the organization had any other activities that was generating income apart from the specific charitable activities. So we have checked on the compliance requirement and even the document required for registration. So that is the tax number 1. We also have the other tax obligation under the NGO. That is the value added tax. That is the VAT. So just the normal way that any other entity has a VAT obligation when dealing with barterable goods and supplies and services. The same way for NGOs, they are required to be having a VAT obligation. So VAT tax, it's a consumption tax on barterable goods and services during their production and distribution. So for every NGO dealing with the barterable goods and services, make sure that you have the VAT obligation. You need to register that with KRA. After you have attained the KRA PIN, do a follow-up and ensure that you have the VAT obligation with you. So for currently the VAT obligation, the registration is done in the KRA offices. You need to be compliant as an organization, and also the directors or the people holding the office for this organization, they need to be tax compliant for you to qualify for the VAT registration. So make sure that if you are working in an NGO and you are operating with the barterable services and goods, make sure that you have the VAT obligation. So for the VAT, we have different categories. We have the general rated, which is 16%, exempted. There is no tax on that. It is completely exempted. You also have the zero rate, which is the goods and services are taxed at a rate of 0%, and also the other rated. But currently, we don't have any transaction under the other rated because I believe we are all aware. Initially, we had the fuel under the other rated, all the petroleum products operating at 8%. But from the Finance Act 2023, they were moved to different tax categories. So at the moment, the other rated is not active. But in case of any changes, it will be implemented in the VAT Act, and the same will come back to be active. So NGOs in Kenya, they're subject to VAT on taxable supplies unless they qualify for specific exemptions. So number 1 condition to note, you are subjected to VAT unless you qualify for specific exemption. So under the corporation income tax, we have talked about applying for the exemption. The same case will apply in the VAT obligation. If you qualify for some exemption, you need to apply for the same to be done through KRA. NGOs must register for VAT their taxable turnover exceed 5 million annually. So according to KRA, for you to register for the VAT obligation, we have the compulsory registration. You need to have a turnover of 5 million and above in a given year. So once you hit that threshold, it's upon you to make sure you register for that. Failure to that, there are penalties given by the KRA. Below the 5 million, you can do it voluntarily. It's not compulsory, but once you hit the 5 million, it's compulsory for you to register for VAT obligation. So NGOs engaged in taxable activities must apply for VAT registration, even if their income comes mainly from donation or grants. So we said that the basic or the major income for NGOs is donation or grants, and it is not taxable. But in the core activity for this NGO is taxable, you need to be having that video. Since our income is not taxable, it's from donation, even the other obligations are not valid. So each obligation is independent when it comes to the NGO. So some services provided by NGO may be exempt from VAT if registered under the NGO Coordination Act or Societies Act. So I have said there before that you may apply for VAT exemption if some of the transactions they qualify for exemptions. So some of the services that this NGO is providing, you find that they are exempted. So you need to apply for that exemption and get an exemption certificate. So that when you are trading with any other entity, you can prove to them that you are VAT exempted. So registered NGOs must file VAT returns by 20th of the following. It should be of the following month. So VAT returns, once you have the obligation, you have registered with KRA, you should be filing your returns by 20th of the following month. So just like the normal company, VAT is done by 20th of the following month. Currently, we are in date 16, so we have up to the 20th to make sure that we have filed returns for September. So it will apply the same for the NGOs. Make sure by 20th you have filed the VAT returns. For non-compliance, we have a penalty of 10,000 per month and 1% interest on tax due. So you have not filed on time, that is by 20th, there is 10,000 penalty. Also, there is a scenario whereby you have filed on time and you had tax to pay, but you have not paid. So there is also a penalty and an interest on the unpaid tax. So we should remain compliant and observe the tax deadline to avoid additional cost to our businesses. The other tax obligation is the withholding tax. So for the withholding tax, we have different categories. We have even the VAT withholding tax on the professional services, contractual services, commissions. So any transaction that is subjected to the withholding tax, even for the NGOs, you need to withhold tax and remit to KRA. So, excuse me. So withholding tax it is a common income and you remit to KRA. So in a transaction, maybe we can give a scenario of a professional service as an NGO. You have received a professional service or even consultancy. At a point of paying this service provider, you're supposed to withhold 5%. So you shouldn't be paying that provider the entire amount. Withhold the 5% and then that to KRA, then the balance you pay the provider. And the withholding should be done within 5 days after the date of transaction. So you have made payment it applies at a rate of 3%. So for these services rendered to the NGO or even goods supplied, you need to withhold. But for the VAT, that one is on the goods, you need to be appointed by KRA for you to act as an withholding agent, and you will receive a letter through your email as a withholding agent. So once you receive the letter, you need to start withholding immediately. But for the consultation, for the contractors, there is no appointment. So you need to automatically withhold that when you engage with the consultants for every transaction. The withholding rates vary depending on the nature of the payment. So we have the management fees, professional fees. We have said that one are priced at 5%. Then we have the contracts, it's priced at 3%. Then for the VAT withholding, it is 2%. And all these, they are guided under the Income Tax Act. So NGO must remit the deducted withholding to KRA within the specified timeline, which is 5 days. So I've talked about that. At your point of payment to the service provider, make sure you have withheld whichever rate that is applicable and remit that to KRA within 5 days. If you pass the 5 days, there are tax penalties given by KRA. So make sure that we observe the timeline to avoid these penalties, which are additional costs to a company. The penalty for failing to withhold tax is 10% of the amount of tax involved, with a minimum penalty cap of 1 million. So you have been, for instance, for the VAT withholding, KRA has appointed you to withhold for your suppliers, but you fail to withhold, you have a penalty of 10% of the amount of tax involved. Once at the end of the year, or even during the VAT returns, you file your returns, and you can see you made purchases from different suppliers amounting to 10 million. That 10 million will be subjected to 2%, which you are supposed to withhold, and KRA will demand the same from you. On the other forms of the withholding, at the end of the year, you come and claim that you had a professional fees or consultancy fee of 2 million. Did you withhold 5%? So KRA will still demand for that, and they will impose a penalty on you. So we should be keen on that, because at the end of the year, when we do the self-assessment returns, we are going to give all this information to KRA. You had a consultancy fee of 2 million. You had a contractor's fee of 5 million, but there is no withholding that you did during that transaction. You also have another penalty for the late payment, which is 5% of the tax due, which you have not remitted on time, or an interest of 1% per month of any tax that remains unpaid. So you have done the withholding, but you have not made payment to KRA. So there is a penalty of 5% and an interest of 1% per month. So we should be keen on those timelines. Like for the withholding, I've said it's 5 days after the withholding has happened. So make sure that you remit within the given timelines to avoid the penalties. The fourth obligation is the pay-as-you-earn. I believe we are all familiar with the pay-as-you-earn, even in the different entities that we are involved with. So for the pay-as-you-earn, this one relates to the employees. It's whereby the Revenue Authority collects tax or income from employees at the end of the month from the salaries the employees receive from the employer. So it's the responsibility of an employer to have a pay obligation. And in this case, for the NGO as an organization, it's the responsibility to have a pay obligation, because I believe even for the NGOs, we have employees with us who are working for us. We need to be having a pay-as-you-earn obligation. So it's the responsibility of this organization as an employer to deduct this tax from the employee's salary and remit to KRA. So the rates for the pay, we use the graduated scale, starting with 10%. We have 25, 30, that's 2.5, and 35%. So there are those graduated scales. that are used in the computation of the pay tax on a monthly basis. We have a threshold whereby we say that anyone earning 24,000 and below, there is no tax to pay. This is because for the 24,000 is the minimum threshold. 0 to 24, the tax rate is 10%. So the resulting tax is 2,400. At the same time, a taxpayer is entitled to a relief of 2,400. So the tax to pay is 2,400, then you get a relief of 2,400. So at the end, there is no tax to pay. So you find that any person earning 0 to 24,000, there is no tax to pay. But this does not mean you should not be included in the pay as you earn. So make sure all your employees are in the pay as you earn, regardless of the amount of the salary. Even if it's 10,000, 15,000, make sure that you have considered them in the pay as you earn. Because at the end of the year, when doing the corporation income tax, we claim the salary and wages expenditure that the organization has incurred in the year. So in this case, KRA already has that record for the salary incurred. So at the end of the year, they expect you to have the same expenditure. In case of any variance, it will be subjected to an audit. You have to show why at the end of the year you have claimed you incurred a salary and wages expense of 5 million, but during the pay as you earn, you just fell 2 million. So the variance tax will be demanded from you. So it's good to ensure all our employees are in the pay as you earn on a monthly basis. So the compliance requirements associated with pay as you earn, this is whereby I said that the organization must register for pay as you earn obligation and pay taxes for employees earning above 24,000 per month. So anyone earning above 24, there is tax, but for those below, there is no tax. So I hope for the tax computation, it's clear. We can still go further and search on the graduated scales and see how the tax is being computed. So the NGOs are required to do the following. You should deduct the appropriate tax from employee salary, remit and deduct amounts to KRA by 9th of the following month. So the pay obligation, you should file that before 9th of the following month. Like now for the month of October, we have from 1st November to 9th to remit the same to KRA. Make sure you file accurately and remit the resultant tax to KRA by 9th. We have talked about the personal relief, whereby I said that the taxpayer, resident taxpayer, is entitled to a personal relief of 2,400 per month and 28,800 annually. And this relief is basically imposed to reduce the tax burden of a taxpayer. So we have penalties for non-compliance. So failure to deduct and remit pay as you earn, it results to a penalty of up to 25% of the tax due, 25%. So that's the maximum you can pay for the pay as you earn, 25% of the tax payable, or a minimum of 10%, 10,000 penalty on a monthly basis. So by 9th, you fail to file the pay as you earn for the month of October, there is a penalty for 10,000 or 25% of the tax due. So whichever is higher, that is considered as your penalty. So make sure that you do the returns on time. So, and for the pay as you earn, as I've said, it is a point of audit trigger from KRA, because at the end of the year, we have the salary and wages expenditure that we claim. There should be no variances between the two, between the pay as you earn that you have done in the entire year and the salary and wages expenditure that you claim at the end of the year. They should correspond. In case of a variance, you need to reconcile properly and support. So the other item is the Social Health Authority, that is the SHA, or basically the SHIF. So this one, I believe every one of us is aware of it. It was officially launched on October 1st, 2024, so just a few days ago. And it is a replacement of the National Hospital Insurance Fund. So initially we have been dealing with the NHIF, but from 1st October, NHIF, it came to an end. Currently now we have the SHIF. That is what is operational. From 1st October 2024, we are using the SHIF, not the NHIF. So the registration for the SHIF, it officially commenced on July 1st, 2024. So from July, we are supposed to have registered, but up to now, we still have that. That registration is still open for the employees and the employers to register for the SHIF. So you need to do the registration in the website, the SHA website. Also, we have a USSD that you're going to check. Every Kenyan citizen, including dependents, they must register with SHA as mandated by the Social Health Act 2023. So we have that act for the Social Health Act 2023. It's the one governing this. So make sure as a Kenyan citizen, you have registered and not the employer. The employer at the end of the month, you deduct from the employer's time using the SHA employer portal, which manages registration and report generation. So as we said, for the pay as you want, it's the responsibility of the employer to make sure that they do the pay as you want on the monthly basis. They remit the taxes from the employee salary and deduct to the authority. The same case applies to this. As an employer, you should register and have an account whereby you shall be deducting employees on a monthly basis and remit the same. So that's the responsibility of the employer to do that. But for those of us who are not employed, we are under the self-employment, we should register independently and be remitting the contribution on a monthly basis by 9th of the following month. So the contribution rates, so for the salaried employees, those of us who are employed, our 5% of the gross salary, and the minimum amount is 300. The minimum amount that you can contribute as a salaried employee is 300, but there is no maximum. Unlike the NHIF, I know we are aware of the NHIF. The maximum we could contribute was 1,700 per month, but in this case, there is no maximum contribution. The contribution will depend on your gross income. Then the contribution rate is 2.75%. So there are various differences between the NHIF and the SHIF, and we are going to see that briefly. At the end of the day, we can see as the SHIF will take place, we can say the taxpayer will be highly affected by this because the 2.75, the deduction will increase as compared to the PS insurance program, the NHIF, that we are contributing. Also for the person, so you are not employed, you don't have a salary at the end of the month, you are required to make an annual contribution of 2.75% of the household income. And then the minimum contribution is 300. Either you are employed or not, that's the minimum you can contribute. So contribution must be paid by 9th day of the following month. So that's the timeline. We are in October. So by November 9th, the same case applies to the pay as you want. Make sure that you deduct the SHIF contribution and remit to the authority. Then for the non-salaried household, we have said that they will be doing an annual contribution of the 2.75 of the household income. So they have 14 days before the annual contribution lapses. So before the year end, 2 weeks before then, you should remit the annual contribution to the SHA authority now. So let's take notes of the timelines to avoid penalties. So we have penalties for non-compliance. So and by non-compliance, we mean late filing and even late payment. So for the late payment, the penalty is 2% of the unpaid contribution. So as an employer, you have a contribution for the month of October worth 50,000. So once you fail to pay on time, you have a penalty of 2% of the 50,000 to make. So that's one is there is a fine up to 2 million or imprisonment of up to 3 years or even both. So we have a table there showing the differences between the NHIF and the SHIF. So we can see like any person earning 20,000 initially under the NHIF, we were using the contribution parts governed by different range of the salary. So a person earning 20,000 initially were contributing 750, but under the SHIF, 2.75 of them 20,000 is 550. So this one is an advantage to this person. But as the salary increases, it's the contribution will increase. So we can see, for instance, anyone earning 50,000, NHIF, you are contributing 1,200, but for the SHIF, you'll contribute 1,375. So it's an increment with 175 shillings per month. For 100,000, we said for the NHIF, the maximum you could contribute was 1,700 for anyone earning 100,000 above. But now when you come to SHIF, you can see the increment from 1,700 to 2,750. A whole 1,050 is an increment. Anyone earning 200,000, initially you are contributing 1,700. Currently you need to contribute 5,500. So we are seeing as the salary increases, also the contribution for SHIF is increasing. And at the end, the net salary that we are receiving will reduce. So that's an impact of the transition from NHIF to the SHIF. So we have the registration process. I believe, if not all, most of us, we have received that message requesting us to make a registration for the same. We have the USSD registration. You should dial the *147# on a mobile device, accept the terms and conditions, enter your ID and the first name for verification, then confirm details and follow prompt to complete registration. So I believe this one is so easy, just using the *147 to do the registration. So if you have not registered before they close the phase for registration, make sure that you use any of the above to do the registration. Apart from the USSD, we have the online registration, whereby you need to visit the SHA website, so sha.go.ke. In the website, you have the registration option. You need to click there, and you select either for self or for the employer. In case you are registering as an employee independently, you follow the path for the self. For the company, there is the employer registration. Follow that path and register. After you have completed filling the details, you review and submit your application. The third form of registration, we have the assisted registration, whereby you can visit the Huduma centers near you for the assistance in the registration. So those are basically the three forms of registration for the SHIF or the SHA. So we have the USSD, online registration using the website, and the Huduma Center. So whichever is convenient for you, make sure that you register. So I believe we are still together and we are asking questions and getting responses in the chat box. So I want us to move in the same pace. I want to be left behind. The next item is the NSSF, that is the National Social Security Fund. And this applies to even to the NGO. That's why we are covering there, because we have the employees in the NGOs. Make sure that we have complied with these deductions, the taxes and the statutory deductions that we do on a monthly basis. So NSSF, is basically established to provide financial security benefits to employees in Kenya. So this one is after retirement, it's a retirement benefit. So you should be contributing during your working tenure, so that at the end, after retirement, you have this benefit, a financial benefit that you receive. So I believe those of us who are familiar with filing the NSSF, or even if you are being deducted the NSSF by your employer, you are aware of the changes in the rates. So currently we are in year 2 contribution rates, which started from February 2024, and it will run to January 2025. So the year 1, it started in February 2023 to January 2024. So currently we are in year 2. So I believe using the deductions that we receive at the end of the month, we can see how much that you have been deducted. Initially, before this program for year 1, year 2, we had different categories whereby we had the odd rates. Under the odd rates, we are supposed to contribute 200 on a monthly basis. We had another category called Tier 1. You are contributing 360 per month. Then Tier 1 and Tier 2 together combined. So the changes happened once we got into this scheme, the year 1, year 2. In year 1, the rates changed to 6%. Even currently in year 2, the rate is still 6% for the employer and the employee. So for NSSF, the contribution is made by the two parties, employer and the employee. So at the end of the day, you receive 12% contribution of your salary. But for the NHF, the contribution is just made by the employee. So that's a difference between the two. So currently in the year 2 contribution, we are using the Tier 1 and Tier 2. We can see in this notice we have Tier 1 and Tier 2. The contribution together is called Tier 1 and Tier 2, and that's the only active category in the NSSF. So for Tier 1, this is whereby you make a contribution on the lower limit. So the lower limit is 7,000, and the upper limit for NSSF contribution is 36,000 in a month. So if you are earning 36,000 and above, the contribution is constant, because we have said 36 is the upper limit. So in the computation, we start with Tier 1. We have said Tier 1 is associated with the lower limit, which is 7,000. We are supposed to contribute 6% of 7,000. As an employee, you contribute 6% of 7,000, that is 420. And the employer to contribute 6% of the same 7,000, you get 420. So the total of what you have contributed and the employer is 840. That is for Tier 1. Then we move to Tier 2. Tier 2, this is whereby we have the difference between the upper limit and the lower limit. So we have contributed up to 7,000. So we need to do the other contribution between 7 and 36. So the difference is 29,000. So that's what we refer to upper limit. To the tier 2, that is contribution on the upper limit. So 6% of 29, we get 1740 from the employee and 1740 from the employer. So the total contribution will be 4320 for any person earning that 6,000 and above. You're supposed to contribute 2160 and your employer to contribute 2160. So you get a total of 4320. But in case you are earning below 36, just the contribution is the same, or just a direct computation. Assume you are earning 30,000, you're supposed to contribute 6% of that, and that is 1,800. So that's how we compute the NSSF deduction. So when filing for the NSSF, you just need to declare the employee details and the salary they are receiving for that month, and you upload in the system, and it will compute for you the deductions. But it's good to be even aware of this deduction before the system does that for you. So I hope you are together. So the next item is the housing levy. The affordable housing levy. I believe it's familiar to all of us. Okay, a minute. So apologies for that. So as we move on, make sure that you register in the attendance list that is being shared in the chat box, so that we can get the list of those who have attended. And in case of anything that we need to provide to you, the recordings, we are going to use that list. So make sure that you register there and provide any details that is requested. So the attendance list is in the chat box. Make sure that you do that as you go on. So the affordable housing levy, it was enacted into law by the president on March 19, 2024 through the Affordable Housing Act 2024. So we have that act, the Affordable Housing Act 2024, and it is the one governing the contribution for the affordable housing levy. So initially it was introduced through the Finance Act 2023, and it was challenged in court. But in March, the affordable housing levy was enacted independently. So even if the courts have another ruling regarding the Finance Bill 2023, the affordable housing levy won't be affected. We are still continuing to contribute that. So KRA, they were assigned as a collecting agent. So when doing the pay-as-you-earn, that's the point where we do the housing levy. We do it together with the pay-as-you-earn returns. And we know that the pay-as-you-earn is a tax for KRA. But now for housing levy, it's not a tax to KRA. We just do it as KRA is a collecting agent. They collect that on behalf of the government. So employers are required to deduct 1.5 of the employee's gross monthly salary and debit to KRA, along with additional 1.5 contribution from the employer. So the rate for the affordable housing levy is 1.5 made by the employee and 1.5 made by the employer. So at the end of the month, the contribution is 3%. So assume you are earning 30,000. Your 1.5% is for 50. So you are being deducted for 50 from your salary. Then your employer is expected to contribute another for 50 for you. So that at the end of the month, you have 900 as the housing levy contribution. So that one is done by both the employer and the employee. Non-salaried individuals in the informal sector are also required to pay 1.5 of their gross income as the affordable housing levy. So you are in the informal sector, you are receiving income at the end of the month in whichever activity that you are dealing with. So KRA expects you also to file the same. File the 1.5% of the income that you have received and remit to them. So we note that it's both for the employed and the non-employed people. So there is no escape. Even if you're not employed, KRA expect you to do the same. For every income that you receive on a monthly basis, make sure that you pay 1.5%. Residents, individual who pay the housing levy are entitled to a tax relief of 15% of the employee's contribution, subject to a cap of one weight per year, 1,000 per year. So this relief, when tackling the pay as you earn, we have talked about the personal relief, which is 2,400, and we said that it is reducing the tax burden of the taxpayer. The same case will apply to the affordable housing levy. Once you make a monthly contribution, you are entitled to 15% relief on the same. So it will still reduce your tax to pay at the end of the month by 15% of that contribution. So, and those of us who have been filing pay as you earn, I believe we have been doing that. We have been considering the 15% to reduce the tax liability for our employees. Failure to remit the affordable housing levy by 9 will result in a 3% penalty per month of the unpaid amount. So the pay as you we said that the housing levy, we do it together with the pay as you earn and the NITA levy. So altogether, they should be done by 9th of the following month. So, and I hope that you have noted we have talked about two relief, the personal relief and the affordable housing relief. Initially, we had the insurance relief on the NHIF, which was also 15% on the contribution that you do on a monthly basis. If NHIF you are contributing 900, you are entitled to a 15% insurance relief, reducing your tax to pay. But under the SHIF, there is no relief. You're not entitled to that relief. So that one is another impact of the SHIF introduction. So we have currently we have the two reliefs. That's the personal relief and the housing levy relief. Make sure when you do the pay as you earn return on the housing levy section, make sure that you also compute the housing levy relief. This one is not system computed. It's you as a taxpayer to make sure that you incorporate that so that you can reduce your tax to pay. So we have e-teams as our next item. So I believe we have received VLRA of the e-teams. This is whereby KRA communicated that every taxpayer, even if you are you don't have the VAT obligation, you're supposed to onboard on e-teams. And I believe up to date, even for the NGOs, we have registered for the e-teams because every transaction that we incur, every transaction that happen in our entities, it should be supported by an e-teams invoice or e-teams receipt. So make sure even for us in the NGO that we have the e-teams with us for the entity. So e-teams, it's a software solution introduced by KRA to provide taxpayers with a simple, convenient, and flexible approach to electronic invoicing. So using the e-teams, this one is a software. Initially, we had the Teams, which was like a device, but for the e-teams, it's a software solution. So it enables the taxpayer to generate an invoice, which are transmitted on a real-time basis to KRA. So each transaction that you do, make sure that you produce the invoice using the e-teams, and it will be transmitted to KRA portal. So every transaction is available in the KRA portal. If at all you are handling your transaction using e-teams. If at all it's a purchase that you are making, make sure that you give your KRA PIN to the supplier so that they can record that and transmit that transaction in your portal. It will be transmitted in your KRA portal. For the sale, any sale that you are making, in case we have any other activities apart from these charitable activities that we are doing, maybe you have rental properties for this organization, make sure that each invoice that you give to your customer, it is supported, and this data will be transmitted to KRA on a real-time basis. We have the key features of eTeams, and they include the accessibility of the various computing devices like computers, laptop, tablets. So for those of us who are familiar with eTeams, we know that we can access that using your laptops, your tablets, and even the computer. We have different versions of the eTeams. So the version that applies to your organization, make sure that you have registered and you can access that using the computers or the laptops. There is flexibility in solutions available. I've said that we have different versions, like the online portal. We have eTeams client software, virtual sales control units, online sales control units, and eTeams site. So all these solutions, it depends with the nature of your organization. Are you dealing with goods and services? Are you dealing with services only? How many invoices do you have in a month? So you will select the appropriate version depending on the nature of your organization. The other feature is stock management. So using the eTeams, you can be able to manage your stock and maintain proper inventory records with you. We have invoice records maintenance. So through the iTax portal, as I've said that the eTeams, it will facilitate real-time transmission of invoices to KRA. So you can be able to access your sales for a month using the KRA portal and even the purchases through the KRA portal. And this is made possible through eTeams. We have easier recording of purchases, that is just accepting the eTeams invoiced purchases. So there is a way using the eTeams, you can be able to record the purchases that you have done or even to update the purchases that you have done in a given month. There is a simplified return filing for taxpayers. Those of us with the VAT obligation, I believe from February, there was the auto-population filing for the VAT, whereby using the KRA portal, you can be able to see the sales that you have made in a month and the purchases that you have made. And once you have just confirmed that the details captured in the tax portal is correct, you just proceed to submit. So the process of the filing, the VAT filing, is very simplified using eTeams. Unlike the manual way that we do to feed each and every invoice that you have for the sales, then you come again to feed the purchases, all the invoices for the purchases that you have. For eTeams, all that data is captured in the portal, thus making the process very simple. We have the eTeams solution. We have said that there is flexibility using eTeams. We have the different versions. So version number 1, we have the eTeams Lite or the USSD. So you can use your mobile phone to use the USSD to enable you to generate an invoice from your phone. So that one is mobile phone based, and it will enable you to issue an electronic tax invoice. Then we have eTeams Lite Web. This one is an online system for those businesses with minimal transactions. So you find that mostly like for the sole proprietors, you have minimal transaction, like even 3 invoices in a month. So this one is very much okay with your business. For the eTeams site, it supports those business with minimal transactions. Then we have the eTeams client. It is suitable for those taxpayers that deals with goods and services. You find in your company, you have you're dealing with goods, also filing services. So this one is applicable for you. Then the eTeams portal. ITIMS portal is for those people in the service industry. So you don't deal with goods. There are no goods for you in your organization. You need to have the ITIMS portal. So each version, I've said that it is applicable depending on the nature of the transaction of the company. We have the other solution or version, which is the online sales control unit. This is whereby you need to do an integration. Like for QuickBooks, you need to do an integration with them. To do an integration with eating so that you can just have one system. So online sales control unit, it enables the system to system integration. So just at the end, once you have done a proper integration, you just produce one invoice with all the particulars of the transaction, and it has the tax component. You have the QR code. We have the control unit invoice number, the serial number. So that invoice is a valid electronic tax invoice from the integrated system. Then the virtual sales control unit is also for system-to-system integration, but this one is for those businesses that have an online and offline invoicing system. If you're dealing with QuickBooks Desktop, this one is applicable for you. For those dealing with online systems, you can use the online sales control unit. So those are the major solutions that you have. So once you do the ITIMS registration, you have first to consider the nature of your transaction so that you can select the appropriate. We have the other items. The other item in our discussion is the tax audit triggers. Excuse me. So for the tax audit triggers, this is basically what triggers KRA to come to audit your organization. So I believe, if not all of us, some of us, we have received this communication from KRA, their intention to come to audit our organization. It being an NGO, we said it is exempt from corporate income tax at the end of the year. But we have those other tax obligations that we have discussed, the VAT, pay as you earn, withholding. How are you doing your taxes on those tax obligations? And even if you are exempted, we say that you are also required to do the annual filing of returns, declare the income that you receive from donation, grants, or any other activity that generated income. Also, you have to show the expenditure that you had and the profit or loss. For this case, if it's exempted, we can say the surplus. Whatever you obtained at the end of that accounting period, you need to do that. So from these tax obligations that we have, it will trigger KRA to come and audit our organization. So these are the tax triggers or the aspects which leads to this KRA audit. So number one, we have the non-filing and the late filing of returns. So in each obligation that we have covered, we have checked on the deadlines. For the pay as you earn, we said by 9th, the same to affordable housing levy, NHF, and NSSF. When we come to the VAT, the deadline is on 20th. So late filing of these returns is a trigger to KRA. Every time you're doing your VAT return on 25th. That one is a trigger. Also non-filing, you have the VAT obligation, the pay as you earn obligation, but you're not doing the return. We find that the last time that you filed is January last year, and we are in October 2024. So for the past 10 or so months, you have not filed your return. That one is a trigger. Trigger number 2, we have the IFMI system used by government to pay its suppliers. So the records using the IFMI system, it's very available to KRA. They'll be in a position to see who transacted with the government, who supplied these items or services to the government. Did you declare the same to KRA, the income that you received from those transactions? So the IFMI system will also act as a trigger for the audit. We have significant variation in amounts declared in returns. e.g. the pay as you earn and the salaries and wages. So I said at the end of the month, once you file the pay as you earn, at the end of the year, you can be able to tell the salary and wages expense that was incurred from the payee records. Then when you come to file the income tax company, you are required to claim the salary and wages expenditure. Are they tallying with whatever you have from the pay as you earn? In case of a variance, that one is a trigger, and KRA will demand 30% of the amount that was not declared in the pay as you earn. So let's make sure that we have done proper reconciliation. At the end of the year, the salary and wages expenditure tallies with whatever we have under the pay as you earn. In case of a variance, probably you had some cash or wages. Do you have the records to support that? Do you have the payment vouchers? Do you have the record schedules, the wages schedule to support the cash or wages for that period of accounting? The other trigger is continuous losses by a company. So the returns that you file at the end of the year, there is no period that you are showing a profit. Every year you are showing a loss. That one is a trigger because they will wonder, how are you operating? Every year it's a loss. How are you in a position to operate in the following year? So let's make sure that as much as we want to avoid paying too much taxes, whatever we are declaring in the KRA portal is on the safe side, and it will not trigger these KRA audits. Then we have business restructuring. You want to restructure your business maybe after 3 years of operation. That one is also a trigger. Third-party information. So there is a third party who is delivering information to KRA. So once they receive this information from the third party, even if it's not part of this organization, it's not an employee, they would want to come and verify this information they are receiving. So that one will trigger an audit. We have media attention on the company. So every now and then, LWK is in the media. So this one will trigger KRA to come and see what is happening in LWK. Even if it's that NGO, they would want to come and see if this NGO is every day is in the media. So they would want to come and verify the activities that are taking place. Are they purposely for charity activities, or is there any activity the organization is engaging in and it is generating income that is not subjected to taxation? So as much as we want to be in the limelight, it also has its downside. We have the current or former employees giving out information. Those people that you are trusting in your business, your employees, okay, they have to be there for the operation to go on. But on the other side, they can give out information to KRA. Maybe even if you have fired an employee, they decide, no, it's my payback time. I need to go and give out the information of what is happening in LWK to KRA. LWK has not been filing the returns on time. They have not been doing full disclosure. They have not been declaring their entire income, and the employees are aware of that. So what happens once you fire this employee? They will proceed and give information to KRA. The other trigger is intercompany transactions. So any transaction happening between intercompanies, it's also a trigger. You may find in this one company you have provided information, but on the other company, the information is varying. So that one is a trigger to KRA. So apart from the audit triggers, we have some tax saving strategies on the different obligations that we have checked. We have some strategies that will enable the organization to save on tax. Number one is the interest expense on loan taken for the furtherance of the business. So you have taken a loan for the purpose of the business, but when filing the returns, you don't claim that expenditure, the interest expenditure that you incur. So you have a higher tax to pay. But if you did your returns right, you claim this interest expense, it will reduce the profitability, thus lower tax to pay. And make sure as you claim this interest expense, make sure that this loan was taken for the purpose of the business. Don't just take a loan, but you go ahead and do your personal dealings with it. That interest expense will be disallowed. So we want to see the outcome of this loan. You took 40 million as a loan. What have you done for the business with it so that you can claim this expenditure? The other one, we have expense in bad debts. So in our transaction, we find that we have those customers whom we transacted with long time ago. They have not paid us. And once you try to follow up, there is no hopes of recovering this debt. So those bad debts, we can, as an organization, as the board or the directors, we can pass a resolution to write off those bad debts. So once you write off, you have to expense them, and they will assist in reducing the profitability. But for this, for you to write off this debt, you should be having maintain a file in your organization to show that you tried recovering this debt and there was no hope to recover. You engaged a legal team. Have a proof of how you tried to recover this debt. Then we have deduction of capital allowances. So in most cases when filing, we find that the capital allowances are not considered when filing the return. So make sure that you have considered the capital allowances on those assets that we have. Take insurance cover. For the pay-as-you-earn, we said that for the insurance covers, we have an entitlement of 15% relief. Okay, basically it does not mean that it must be an NHIF. You can have any other insurance cover, but make sure that it's for a registered entity. So you are entitled to a 15% relief, and this one will reduce your pay tax to pay at the end of the month. The other strategy is taking a mortgage instead of a loan. So for the mortgage, how it reduces the tax to pay. So at the end of the month, or on a monthly basis, you are expected to pay interest. And interest on this mortgage, interest up to 25,000 is allowable for the tax purposes. So that mortgage that you have, the interest that you are paying, make sure that you have disclosed to your employer when filing the pay-as-you-earn, and it will assist in reducing the taxable income, thus low tax. Register with the retirement benefit scheme. So contribution to a benefit scheme, the pension schemes that we have, up to 20,000 is allowable on a monthly basis, and it won't be subjected to tax. So once you register to that, it will be reduced in your salary. Assume that you're contributing 20,000 on a monthly basis and you are earning 50,000. So the amount to be taxed will be 30. That's lower tax to pay. Contribute to a registered home ownership saving plan. That one is also another saving strategy. Get a disability relief. So under the pay-as-you-earn, those employees with disability, they are exempted from paying tax to a maximum of 150,000. If a disabled person is earning 0 to 150, there is no tax to pay, but you need to be registered and you have an exemption certificate from KRA. The other one is proper record keeping. Each transaction that you do in your organization, make sure that you maintain proper records, have those invoices, petty cash vouchers, any expense receipt. For the wages, we see that you have those wages schedule, the payment vouchers. In case of an audit, you can be able to support each and expenditure that you have claimed, because failure to support, it will be disallowed, leading to higher taxes. So proper record keeping will enable us to support the expenses that we claimed, thus reducing the tax to pay at the end of the year. Excuse me. The other strategy is accuracy when filing returns. So make sure that the person you are engaging to file your monthly returns or even the returns at the end of the year, they are well equipped. They have the necessary knowledge so that they can do it correctly to avoid those errors. The errors that we do when filing the returns, they are very costly. During an audit, you will find yourself paying high taxes. Once you check on whatever is causing, it was just an error that was done when filing the returns. So make sure that we maintain accuracy when filing this return. The other one is understanding return timelines. We have said when you file your taxes past the given timelines, there are penalties and interest. So for you to save on this, make sure that you file your returns within the given timelines. The other strategy is engaging a professional tax expert. For these tax issues, when you do the audit, filing the return, make sure that you are engaging a tax expert to ensure that your returns are being done accurately to avoid those errors that will cost your company. So those are the tax saving strategies that we have. The other item is the tax audits. So currently, KRA is having a tax audit for taxpayers, and these are the ongoing audits. So we have the legacy debts. So we are aware before the iTax system was put in place, the transactions were being done manually. So there is migration from the legacy system to the iTax system. So there are audits on the legacy debts. So those debts from those period before the iTax was in place, the audits are ongoing, and the KRA issued a notice that we have up to December 31st to make sure that you have raised any concern resulting from the legacy. So in our iTax portal, we have that section for the legacy. Make sure that we access and we have confirmed that all details are correct. In case of any concern, make sure that you raise that to KRA and ensure it has been solved before they raise an assessment for you. Then we have the returns review. So this one is very common nowadays, and I believe we have received letters from KRA. They want to review the returns we have done, maybe for the last 3 years, and they are expecting you to deliver the invoices, ledgers, bank statement. They want to review whatever that you have filed. Is it the actual position of your company? So that one is happening. And we should keep on checking our emails for these communications from KRA. The other one, we have the expenses assessment. Those expenses that we have claimed, are they valid? Were they incurred for the purpose of the business? So they are auditing that. So also to see, have you overestimated the expenses incurred in the business for that given year? That's giving you a lower profit to avoid paying taxes. So the expense assessment is very common nowadays. So make sure that all the expenses that we incur, we have maintained the records, and we have supported each and every expense that we claim when filing our returns. Then we have the advanced tax. This one is on commercial motor vehicles. We have in our organization, we have motor vehicles, but we do not pay advanced taxes on those commercial motor vehicle. So that one is another audit that is happening. So make sure for every commercial motor vehicle that is registered under our organization, make sure at the beginning of the year you have paid the advanced tax on the motor vehicle. At the end of the year, we are going to consume that tax that you have paid. Then we have the IFMIS. We have talked about the IFMIS, whereby the organization are trading with the government. So those suppliers trading with the government, make sure that each and every income that you receive from there, you have declared that and you have paid the relevant taxes on that. We have the nil filers. So those who are filing nils, we receive a letter for audit because KRA want to verify why are you filing nil every year. They will access your bank statement. Is it accurate? Is whatever income, do you have any income in that bank statement yet you filed a nil return? So make sure before you file a nil return, you have done a proper check to ensure no transaction took place and there was no income that you received. Then we have the non-filers. We have talked about that. You have the obligations, but you have not been filing the tax for the past 10 or so months. That one is also another audit that is going. And the only thing that will fail you is the bank statement. KRA will request for the bank statement, and they will review the same to see the income that you have received. Not having pay obligation, yet we are having salaries as an expenditure. So how did we incur that salary, yet we don't have the pay obligation? We said that for every organization, we need to have the pay obligation. Remember, even if you don't have many employees, you have one employee. Director is number one employee of a company, and he should be present in the pay as you earn return. So even if you say you're just operating only as the director, you should be having the pay obligation. Tax investigation on evasion. So you know that evasion is whereby we are not paying tax. We are doing that illegally. So KRA are still investigating on that. So those are the tax audits that are ongoing. So we have some actions to take during the audit. So you have received a letter from KRA for an audit. What do you need to do? Number one, you need to understand the time frame given by KRA. In that letter, whereby KRA they have communicated they want to verify your returns, they have given a timeline. Kindly respond toward this letter within 7 days. Make sure that you understand the timelines given. In case you are not in a position to act within the given timeline, kindly communicate to them and request them to add you more time so that you can respond and maybe provide the documents you have been requested. The other action is to evaluate the information required by KRA. The letter is just brief, but they have requested documents from you or information from you. Make sure that you have evaluated every information required. For the bank statement, for the invoice, for the ledgers, evaluate every information required by KRA. Carry out a pre-audit compliance check. Before you submit these documents to KRA or any information, you need to do an audit compliance check to see, am I compliant? What are the tax implications that will result once I give this information to KRA? So once you have done that, you need to have an opening meeting with KRA team. Every time KRA summons you to their offices, make sure that you go have a meeting with them, understand what they want from you as a taxpayer. Then assign a contact person from your finance team to be the contact person. So you have started this audit with KRA. You need to have one person to be communicating with KRA. In case they visit your premises, employee A is the person to be contacting with them. Even if the person is not in, there's no any other person who need to provide information to them to avoid giving different information which may have some implication. Resolve as many issues as possible during the audit process. All the issues KRA have highlighted for that audit, make sure that you have resolved all those issues so that they cannot do an audit again. Ensure you receive an official letter of finding from KRA. So after the audit process, you'll come to a conclusion with KRA. Maybe this is the amount that you need to pay, or this is the action that you need to do. Ensure that we receive an official letter with the findings and every communication from that exercise. Because we may find that after 2 years, the person who was in charge of the account was transferred to another station, and the new KRA official wants to audit you. But with the official letter of the findings, you can present to them and say, for the year that you want to audit, the year 2020, this is the finding that were done from the previous audit, and we came to this conclusion, and this was the final thing that we settled on. So make sure that you have those official letters of the findings and you maintain them well in your organizations. The last action is to pay any taxes which are not in dispute. So you have gone through the various stages with KRA, and any taxes that you have did that, this tax, you need to pay it. Make sure that you have paid within the given timelines to avoid even incurring more additional cost on the interest of those taxes. So we have the accounting books required for tax audit purposes. So during these KRA audit purposes, these are the documents that they will request from you. We have the sales ledger and the purchase ledger. So they expect every organization to be having an accounting system. So you have a ledger, you have recorded all the transactions that has been taking place, the sales that you have made, the purchases. Make sure that you have maintained those sales ledger and purchases ledger, and they are well updated. Then the sales and purchase invoices. All the invoices that you have transacted, the copies of the sale invoices that you issue to your customers, the purchase invoices you receive from the suppliers. Make sure that you have copy of those invoices because when they are being requested to by KRA to support the claims that you have in your returns, you have enough support document to provide. Then we have the general ledger showing all the transaction for that given period. The asset register, you need to have a well updated asset register showing all the assets owned by the company. Then we have the M-Pesa statement and bank statement. For this, they will use this to verify the income that you have received. In case of under declaration, they will demand tax on that. So make sure in our bank statement for the organization, you don't have any personal transactions there. In case as a director, you have injected money in the company, have a support to show I injected 5 million and this was the purpose for this money. You withdrew money from the bank, 10 million. What was the purpose of this money? Because for the withdrawal, directors withdraw, they consider that as a benefit and then they expect that to be charged the PS1. So make sure the M-Pesa statement and the bank statement are properly reconciled and they are just used for the purpose of the business. Then you have the debtors and the creditors accounts. Maintain those aging analysis. Those accounts are well reconciled to show the actual position, the actual balances for the debtors and the creditors, so that whatever you claim or declare in your balance sheet, it corresponds with those accounts that you have maintained. Then you have the salary and wages, have the payment schedules with you, the vouchers, the pay slips, all those documents to support the salary and wages expenditure, have them. KRA will go ahead even to ask for the proof of payment. How did you pay your employees? Was it through M-Pesa, through bank? You need to support that. So maintain all those documents supporting the salary and wages. Even the attendance sheet for the employees, have them with you. You also need the director's account. Have a proper reconciled director's account showing the money director has contributed to the company, what the director owes the company, have that. And it should be reflecting the actual position of the director. Then the loan statement. Don't just come and claim that you have a loan of 40 million. You incurred interest expense of 14 million for that loan, but you don't have a statement. You should be having a loan statement to support each and every loan that you show in your accounts. You need to have an inventory account, and the inventory account should be well reconciled. Of transactions. Make sure that you have those schedules after the reconciliation is done, well maintained. They'll be used during an audit to support the inventory that you claimed. You claimed you had an inventory of 50 million at the end of the year, but you don't have any document to show that. Make sure that the inventory account is well maintained. Even reconciliation reports for the inventory are well maintained and signed by the relevant party. So that brings us to the end of the class. We have covered the different taxes associated with the NGOs and what we need to do even in case of a tax audit. So I believe it was very helpful. We have learned one or two things. And as well in the chat box, I believe we have been getting responses for the questions raised there. So we have something new for you as our partners. So as LWK, we have an accounting software, which is My Accurate Books. This one we have developed, it's in-house and is operational currently. So it will help us to do proper bookkeeping. My Accurate Books, that one is an in-house developed software by LWK and Associates. So you can visit the website www.myaccuratebook.com and familiarize with that software. We have a version which is for the small businesses for a point of sale. So if you are there and you have a small business, you can visit there and even register. You can still access the demo for that and familiarize with that. For more information regarding the accurate books, you can reach us and we'll be very helpful towards that. Then we have our calendar of events. So currently we have a taxation masterclass, which is ongoing, and I believe some of you are part of that. So that masterclass, it is started on Monday 14th, and it will run up to 25th October. It's a 2-week masterclass for taxation. We are handling the taxation in Kenya, the issues with KRA. So it's a very good class. We have been doing that. I believe if not even for this session, some of us have been part of those classes. So we are charging 20,000 for that class. You are free to come and register and learn together with us. So if you are interested, you can just reach to us using our number, the number we have given there, and have a discussion on how you can join us as we proceed with that class. Then on date 22, that is Tuesday next week, we have a CEO Breakfast Edition 4. So we have been having this for. So we are going to learn about the corporate tax planning strategy. And then you will be DTB Center Mombasa Road, just opposite Airtel. So we partner with DTB to hold this event. If you are a CEO, you are very much welcome. Just to reach to us for registration. The CEO breakfast, kindly give us a call and get to see how to register for that. So that event is free of charge, but we need to register. Yeah. Then on 25th October, we have a webinar, a free webinar on tax dispute and resolution. So plan to attend that. We are going to share the link on attending. Then on 28th October, we are going to have an introduction of accurate books to business owners. So we have a physical training. I've said about the My Accurate Books accounting software that we have as LWK. So on that day, we are going to have a physical event whereby we are going to introduce it to business owners and do a training, or rather a demo on how to operate the same. So you are very much welcome to come and join us on that. So this is the details for the taxation masterclass, which is ongoing. So today we are on day 3. It started on Monday. It will go up to 25th. It's a 2-week masterclass from 7 p.m. to 9 p.m. I believe that time is very convenient because we are out of work. Then at the end of the 2 weeks, we are going to receive a certificate, and this certificate will enable you to get CPD points for the XPAC members. So you can reach to us in case of any query regarding the same, and reach for us. And we have an offer. In case you come as a group of 3 people, we are charging 18,000 per person. Also a group of 5 members and above, that is 15,000. So call us so that we can arrange on that. This one is the CEO breakfast that I've explained. We are in edition 4. That one is this poster. It shows the previous event that we had for edition 3. That's how it was. So it will be on Tuesday, 22nd October from 9 to 1, DTB Center, Mombasa Road. reach to us on that number or even the email address for more information on the same. And it's purely free. This event is free. So if you are a CEO and you are there, kindly join us and get to learn more on the taxes. Then we have the next webinar, that is 25th October from 10 to 12. It will be the tax dispute and resolution mechanism with Dr. Regina. So be present to learn that. It will be an online webinar and it's free. We also have another amazing deal. We have a tax health check. We have been doing our taxes, but we need to do the tax health check to see, are we compliant? What is our current stand with KRA? If KRA comes to us today, what will be the implication? Are we safe regarding the taxes? So this offer goes for 10,000, and for this tax health check, we check for your tax obligation for the past 2 years. So we check for the year 2023 and the year 2022, just for 10,000. So it's a special offer. Make sure you grab that offer before the offer is over, so that we can check on your taxes to ensure that you are very compliant. In case of anything that we need to do before KRA comes to us during an audit, we are on the safe side. So in case you are interested, you can contact us using our phone number as given there and even in the email address. So we have our services for those who are new to us. As LWK, we offer audit services. We do the statutory audits, internal audits, accounting system audit, project management audit, financial statement audit, forensic audit, and the tax compliance audit. So in our tax department, those are the services that we offer for audits. In case you'd be interested in any of them, feel free to reach to us. We also have a tax department, and this is the tax services that we offer. We do the tax returns, monthly tax returns at the end of the year, the tax sales check, like we have talked on the offer that we have. We have the tax refund process with KRA, tax planning, representation at KRA on different tax issues. If you receive that KRA letter for an audit, you don't know how to go about it, you can get to us and we can assist you in that. So we represent you as a tax representative to handle that KRA audit or even any other tax issue that you may be having with KRA. We have the KRA audit process, as explained, advisory on tax implications for various business transactions, and the tax training. So we do the tax training. If you need any tax training, you can call us and organize on that. Even if it's for the tax masterclass, we have several in the course of the year. So we have been doing the same. Be free to join our tax trainings. Then we have the bookkeeping, whereby we do the management reports, filing of the monthly returns, bank reconciliation, payroll management, accounts payable and receivable, trial balance reconciliation, cash flow, break-even analysis, budget to actual report. All those activities, they fall under our bookkeeping department. In case you want us, you would like to partner with us for this service, kindly get back to us and assist you in the bookkeeping for your organization. Then we have another one for the internal audit. So we have talked about the entire audit department, but we have this functionality for the internal audit, whereby we audit your accounting system, your bank reconciliation, the internal control processes within the organization. Tax health check is still part of the internal audit, management reports and governance, payroll review, procurement, payables and receivable, and budget to actual reports. So in case of any service that you would like us to partner with you, kindly give us a call or even using our email. We also have the consulting, financial consulting services. So in case of any, feel free to talk to us. Also have the advisory services. on the different sections of the business. Yeah, so we offer those advisory services, not just the tax and the audit that we do. We also have that, the advisory services. So where are we located? As RWK and Associates, we are located in two different places. We have a Thika branch that is along Thika Road, opposite Mangu High School. That's where our office is located. Then we have Nairobi office, Westlands, along Westlands Road, gate 83, just opposite Museum. So in case you would want to visit us for any communication, for any service, feel free to visit any of our offices and you're going to receive the assistance that you need. Yeah, and that's all for today's class. So maybe we can have a brief, like 5 minutes to respond to questions that have not been answered. So, and you can have our contacts in case you want to communicate to us. Yeah, those are contacts. Kindly save them and communicate to us at any time. Yeah, okay. Lilian is asking a question whether we train on QuickBooks. Yes, Lilian, we do train on that. So you can reach to us so that we can plan on how to offer that service to you. And make sure that you fill in the attendance list that has been attached here by my colleague.